Good morning, everybody. It's Chris from Serene Education with the four majors in this update for the 12th of September 2013. Okay, guys, per usual, four majors very quickly this morning, 10-minute slots, giving you my impression on what's likely to occur today using our FX8 Ultimate template on the MT4 platform. Okay, so Euro US dollar yesterday, we had a nice move to the upside, clearly a nice bounce on the institution moving average. We've had a nice move higher into resistance highs. You can quite clearly see here. I'll make it nice and big so you can see that. Resistance highs, price failing to get above it. Nice tweezer top over here, and eventually price actually looked lower. And doing so, moving back to price support and resistance levels, which also happen to represent fib ratios on the daily, but also importantly back to our institution moving average. Once we got here, we saw the breakout, then the pullback counter, which should have actually stayed below the institution moving average if this was to be genuine negative sentiment to trade lower. We actually saw a bullish engulfing, but not more of a engulfing, but more of a tweezer formation here. Price actually maintained above the institution. We had a slight pullback intraday, and then the trigger alert came through. After all that news from non-farm payroll in particular, the negative figures for the US market saw the euro actually gaining strength with that and pushing it back up above the daily fib here at 30.2, and subsequently heading higher into the 23.6 and back towards a reattempt of the weekly highs here at the 23.6 as well as the daily 23.6. Now into it last night. However, on the Asian session going into the European session this morning, we've had a consolidation. So this level here at the 23.6 on our weekly becomes our resistance level intraday, and the 23.6 over here down below on our daily, so I've taken the low to the current high. This little dotted yellow line over here should represent your intraday support. So I have a resistance above and a support. So if price is still to be long, then you can see we have the RMO above and the MACD has gone above, and we have a blue arrow, blue candles. However, we have a resistance level. This daily fib level over here at the 23.6 should, and I use it as a support. So if price still ranges within this above this level over here, it will then particularly start or reattempt the current high, the weekly high. And if we get a close above the weekly high this week, then we should be looking for price to reattempt the current highs we saw over the past couple of months. Failure to break above the weekly this week would inevitably put more negativity in the sentiment, and then we could see a retracement back towards the 38.2 on the daily, but also back towards this weekly the institution moving average in particular. So very, very important. You can see over here the long-term sentiment very much upside. However, intraday negativity, and the R squared is complementing that on our 5, 15, 30 minute, which is why we're seeing a pullback here. So the overall sentiment very much positive. However, pullbacks intraday. So in our 4 hour, looking for the pullback. There we go. We get a buy signal straight away on our 4 hour. Just bring the chart forward. You can see that we have higher swings intraday. So the intermediate trend is up. Swing high, swing high, swing high. Oh, break over the institution, which is great. That's what I said to you. If on our daily we can see the 23.6 on our daily using as a support, which happens to be above the institution now. Okay, trading below the institution is negative. Trading above the institution is positive. So we're above the institution. However, the weekly fib is now actually finding or resisting price from moving higher. If we do get a consolidation, because 9 out of 10 times you get a breakout and a pullback, this could be the pullback. As long as price maintains above the institution on an intraday, then we should look for price to reattempt the 23.6, which is our weekly resistance, break above that, pull back, and then the continuation higher to those highs we've just come from. So that's what we're looking for at the moment, guys. We're looking for a nice juicy pullback and then the confirmation bounce, and on that bounce we can look to enter and target the upside for the foreseeable future. On to sterling. Here again, also very, very important. You'll notice on the daily, let me just move out. You can see that price just recently has breached not only the institution but also the fib level here, okay, which is the 61.8 on our weekly, which is a positive sign because prior was resistance, breakout. Very strong breakout candle. Let me just move back to it. Very, very strong breakout candle yesterday, and now we're seeing a pullback. So our 61.8 on our weekly now needs to maintain as an intraday support level. Price is fine. If it pulls back, happy days, because it tends to happen 99% of the time. When you have a breakout, people take quick profits. But as long as sentiment can actually still maintain above the weekly going into the end of this week in particular, then we could see the start of a new trend or new move to the upside towards the all-important all-time highs that we've seen recently. And that's up here way past or around the 16, just above the 1600 mark, which is above the psychological round number of 1600. Very, very strong area. And where price is trading right now to this level, you're looking at an excess of 220 odd pips. Take away your spread. So a lot of movement, clean air to trade, guys. But we need to see price actually finding support above here. So look for the pullback candle which we're seeing right now. If we go to a 4-hour time frame, you can see I get a buy signal. You look at the indicator over here, everything is blue, daily blue. So we're getting a lot of buying sentiment coming through. We are seeing two indecisive candles in the last 8 hours, and the candle that's in play right now on a 4-hour is pulling back. We have a lot of news out for Europe today, but the only one we have today for sterling, which is quite important, is the inflation report hearings. Very, very important. We're going to see how the inflation report is going. So ideally 61.8 over here down the bottom here at the 1576.87 mark. That would be our safety net, our support. As long as price maintains above that, then the likely outcome is that we're going to see a bounce and then a target upside. Long-term sentiment very much positive, and the R squared complementing that. But you can see quite clearly intraday, a lot of selling through our 5, 15, 30 minute and hourly, and the R squared is complementing that selling. So we know this is genuine selling, but as long as price maintains above the 61.8, the overall sentiment still looks long. We have swing high, swing high, swing high, swing high, swing high. So if prices move swinging higher, that means trends positive. 20, 50 and institution below price, positive. RMO above, positive. MACD above, positive. And we've had a break of a major support weekly fib level here. So it's all positive, just having a consolidation on the breakout. US dollar Swiss franc. Here, negativity. Tweezer top. Prior try to break of this major monthly fib here, failed to do so on the pullback. We had a tweezer top formation, and subsequently we've had a lot of selling off. So just by looking at the actual candlestick, has seen a nice move to the downside after that, and in fact you should be 80 pips and change in profit after that announcement. Very, very strong candle, pullback candle, and subsequently we had a lot of selling. What it's done though is you can see the price has fallen after failing at the 50% on the monthly, as well as our 38.2 on the weekly. Sorry, the daily price is now then targeted back down towards the daily fib, which is the 23.6. And then if you can see it's consolidated over the past couple of days. If she finds support here, then there might be a reattempt of the institution moving average and back up to the 50% retracement level. Failure to do so, then we head towards the weekly, get below the weekly, then we should be testing these all-time lows that we've seen through this year. So very, very important. You'll notice the long-term sentiment, very speckled, but nonetheless still very negative because it's still below the institution. And you can see the sentiment on our 5, 15 and 30 minute positive, and the R squared is complementing it, hence the reason why we have a consolidation. So if we drop down to our 4-hour time frame, just move this over so you guys can see it. You can see the institution moving average has been the saving grace of here. We're trading above the institution moving average on our 4-hour for the first time since, let's have a look here, since July, mid-July of this year, guys. So it's a very strong, it's a good signal that if price is trading above that. However, you see we've had a major pullback recently. Those non-farm payroll figures really took a lot of momentum away from the US dollar, and subsequently we've seen price trading below the actual monthly fib and retempting the institution moving average. If price can actually maintain above the institution moving average by the end of close of this week, the more likely we're going to see price bouncing high. And if she does bounce, she's going to test back up towards the 38.2 on the daily and back towards our 50% on our weekly. Our monthly fib. If she fails to find support here by the end of close tomorrow night, if she breaks lower, then our weekly would be our first target, and ultimately if she breaks below the weekly over here at the 23.6, then we should be looking for further negativity, and that these levels down here at 91.62.5 mark should be our ultimate goal. So consolidation near term. Look to see if there's anything out today. We do have a lot of news for the US market, unemployment claims in particular. They're expecting to be further unemployment claims, expecting a 10,000 more figure, which is not so great. Then we have import prices month on month, and then we have the FOMC speakers talking, and we have the federal balance, guys. Very, very important. The federal balance, budget balance at the moment are very, very negative. The previous figure was 97.6 billion in negative, and they're expecting a forecast of negative 155.3 billion. So a huge difference, close on 60 billion short. So that's not really good at all for the US. If it comes out even further negative than that, we're going to see the US dollar take a bit of a hit. So be aware of those news announcements, guys, and see what price is doing. So we know over the past couple of days we have consolidation here. And if we do see some negativity out in the US market this afternoon, those unemployment claims and the budget figures, that could very well be the catalyst for a breakout and then trade lower. If they do come out positive, that could be the catalyst to find a bullish engulfing candle here on support, i.e. the institution moving average plus the 23.6 on the daily. That would then start to look favorable for upside. Last pair of the day, the US dollar Japanese yen. Here again, we've seen the US dollar gaining a lot of strength against a very weak yen recently. However, you can see quite clearly we've had a number of attempts of the monthly fib here at 61.8 on the daily as well. And each breakout we failed to see a pullback and a continuation. So we had a breakout, pullback, failed. Breakout, pullback, failed. Breakout, pullback, failed. And yesterday's failure has formed now a tweezer top at a major resistance level here, which is in the shape of the fib, monthly fib. And you can see quite clearly in the past we've had some failures here. There's another tweezer top, and subsequently we had a huge sell-off. So now, as it seems on the Asian session, we've had a real fall to the downside. And if she maintains below the 61.8, we should be looking at our first target intraday towards a 50% retracement level here on our daily, which is approximately where price is trading right now. To that level, you're looking at a healthy 72 pips and change. The RMO is still higher on the daily, hence the reason why the candlesticks are still blue. So we have blue arrow, blue candlesticks. The only sticking point is this fib level here. We have two fib levels. We have the monthly, which is the blue line, and we have the dotted line, which is our daily representative. And that's our fib levels, and they're both together. So this forms a nice resistance level. MACD is above the zero line, so everything's positive, but the MACD is clearly been consolidative here, dark green, and you can see price hasn't really moved anywhere. You can see that the charts are very undecided. We have long-term sentiment on the charts, which is right. We are seeing higher. However, our intermediate charts intraday is smacking, just bodes negativity. We are seeing a bit of buying sentiment coming through on our shorter term. Hence, we've seen price consolidating now to the upside. So, as it stands at the moment now, the overall sentiment is up. However, we are seeing a major resistance. This level over here, this monthly level over here, needs to be breached, guys. So, at the end of this week, if we don't see the US dollar above this line over here, then the overall sentiment looks negative. And this candle yesterday does smack of negativity because it's a bearish engulfing candle. It tweezers top at a major resistance level, which is the monthly fib level. So the only thing that's going to cancel that negative candle out is a bullish engulfing candle close higher than the 61.8, as well as this 50% retracement on the time frame, the daily. So as it stands at the moment now, look for negativity intraday, or the start of negativity to the intraday. So we drop down to our 4-hour time frame. You can see a lot of selling over the past 20 hours, in fact, and you can see what price is doing now, testing price support and resistance levels intraday. You can see the institution moving average is still below price, hence the reason why on our 4-hour you can see that the RMO as well as my moving average are still positive, which is a good sign, because as long as it's trading above the institution moving average, then it's looking for positive. Swing high, swing high, swing highs. Price has dropped now. If it breaks below this consolidation area here at 99.51 now, is breaking the last prior swing high. And if she's doing that, she's going to be forming a new swing low. Swing high, swing high, swing high, breakout. If she breaks this and closes lower, then that's going to be our next target, the 50% retracement, which would bring us back to just short of the institution moving average, guys. RMO is dropping. The MACD clearly is dropping and is very dark red. So we're seeing a bit of negativity here intraday, and the R-squared is complementing that. We're seeing a pullback on our 5 and 50 minutes. The R-squared is complementing that, and hence the reason why we're starting to look at these hammer candles, reversals at a major support and resistance. You can see a lot of consolidation over here. Support level, support, support. So this, now, if we don't see the 4-hour candle finding support above that, then we're not going to see price reattempting the 50% and 61% fib retracement levels above. And we see a bearish engulfing candle close lower than the 4-hour. That would subsequently mean that we should be looking for negativity for the remainder of this week, and we should be targeting the 50% on the daily, but also the institution moving average below. That's it, guys. Short and sweet. Good old 15 minutes of short and sweet. Hope you find it of use. Please, if you are using this particular template, please back it up with some money management rules. However, the most important part of it all, use or follow the rules of the template. It's meant to be very mechanical in its approach. So if this does that, then that, and that, then the outcome is meant to be negative. It's far better to trade a very mechanical template than to look for or to use the psychological, emotional side of things. You got to use something that's very mechanical, takes the emotional play out of trading. Once you've done that correctly, you back it up with sound money management rules, you are in for a profitable trading aspect. So keep it simple, as I mentioned, back it up with sound money management rules, and you'll be a winner. I'm going to leave you with that. Hope you have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.